following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a great start to the trading year and had a great holiday season. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network that I'm sure many of you are listening to this program on right now. And I am joined on today's program by a veritable gaggle of silly co-hosts, starting off with the man holding down the option pit chair today, good old Andrew Giovanazzi, the Chief Strategy Officer over at Option Pit. And Andrew, I like that title because in the options realm, that can have many meanings.
It can. That way it totally confuses everybody who's in charge at Option Pit. Is it Mark or is it me? That's why I think he picked it. But it's actually another guy who's our CEO that keeps the two traders
that keeps you guys in line. Well, someone's got to run the show and actually run the Mark's business.
Baby. I just help.
Yeah, someone's got to run the business while you guys are in there talking about gamma scalping all day and all that fun stuff.
Exactly. He's like, I don't care about gamma scalping. Just Just show me the checks. Show me the checks, guys.
You have the inverse problem to a lot of your customers, I'm sure, and clients, is that they have to figure out a way to incorporate their trading into their regular day jobs and lives, while you guys are the opposite. You guys are looking at your trading and your screens all day. They have someone else come in to run the day job, run the business, as it were.
It's funny. That's kind of how it works. But then, we're on a line with clients a lot. So we're looking at their positions, and then you have a couple things going over here, and you got to kind of you have to focus on them. So it is similar in some ways, but the good thing is we're kind of always able to look at the market all day, which helps, obviously.
Yeah, that is helpful. Or you can just opt for my model, which is I run everything, and then you're very busy and frantic all day long.
Exactly, and you're running around with your head cut off.
Actually, that's doing a disservice to our great team here at Options Insider, who runs most of the day-to-day stuff on the website and frees me up to do a lot of the other fun things, like host all these fun shows on the old radio network. And of course, I am also joined here by good old Darth Tim Navabi, holding down the OX.
Really? That's me?
That is
That's
you,
not
yes.
me.
Unless Tusaw's in. Tusaw's doing it to you. Tusaw's scamming you there. All right,
I gotta take a break for a second, guys. I have one of those stress balls. I just broke it, and I got a really big mess.
Okay. That's a new one.
That is a whole other world right there.
I guess the BBI was pretty high today after all. I don't know. A lot of stress in the Tusaw house, I guess.
Wow.
That
was truly awesome.
I didn't know they had some sort of liquid inside of them that could be messy. I suppose they do. All right, Tim.
This is really nasty stuff. It might be a minute. I'm sorry.
Tim, we'll start over with you then. That's a fantastic image of Tusaw covered in some sort of goo. I don't know what, but leave it up to your imagination. All right. And I am also joined by the man holding down the OX hot seat today, none other than Mr. T-Nav himself, good old Tim Navabi. And Tim, a little birdie told me that you had a pretty eventful holiday season and indeed a pretty eventful start to the new year. Would you agree?
Yes. Well, thank you very much for asking. As I like to describe it, I exercised my platinum option, and I'm long now a white futures contract.
I hesitated to bring it up because I know all of the female listeners of our show just tuned out completely. So we've lost all of them, all 6 of them. But but the rest of our listeners are tuning in intently. And, of course, congratulations, Tim. That is an excellent development, if I do say so myself. I haven't met your wife, but I'm sure if she can put up with you, she's a fine woman indeed.
Thank you very much, Mark.
All right, listeners, and we are also joined in progress by good old Uncle Mike Tusaw, the man from the mountains himself, who has been called away at the last minute from his microphone by a pressing stress ball accident that he is in the process of seeing to. So we'll hopefully have him join us once he clears up all that mess over in KYO HQ, aka the St. Charles satellite office. So with the team mostly assembled and mostly free of goo, we're going to roll right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss, surprise, surprise, what is trading, what is moving the markets, what is lighting up the old tape today, and not a heck of a whole lot lighting up the tape today. The S&P is closed up nearly 4 handles to 1281. The Dow closed down a whopping 2.72 to 1214. 12,450.7, and the good old NASDAQ closed up actually tech-heavy day today. A lot of that coming up with some of the movements we saw in Apple and others, as well as the impending arrival of CES, which always moves the tech realm. So NASDAQ up a little bit today, up 21 handles to 2669, and the good old VIX cash selling off mildly, down 0.74 to 21.48 on the day. So with that said, gentlemen, not a whole heck of a lot really lighten up the tape to catch our interest today. So maybe we'll start off with...
Well,
go ahead.
I was going to little disagree with you there.
Oh, please, by all means, disagree.
I mean, sure, you look at the end of the day, you say, you kind of yawn. But, this morning, I think we were down, nothing major, but... we were down, I think, 77, something like that, and just marched higher all day long. So
that's true. We did have an intraday rally that brought us up a little bit. So those close to close numbers don't really, they belie the true movement lurking underneath.
Mm-hmm.
So there is some. See, would you guys have some call volume this morning?
Well, yeah, later in the day, people really kind of were a little shy this morning, first thing. And then I think as soon as the market started to gain some ground, and didn't look back, past 10, 11, then the call volumes really picked up.
And Andrew, while you were on the phone with your clients all day and watching your screens for potential gamma scalps, what, if anything, caught your eye in today's action?
You're laughing, but what surprised me is, okay, you're looking at it. So for gamma scalp, one is we did have the VIX started up on the day, actually at one point, and it ended up down 74 cents. So we had a nice solid decline in vol. But notice, like in the morning, everybody looked. Oh, there was kind of bad European news today. Sell it off, and then everybody just looks around, looks at each other, and says, oh, it's not that bad. We're used to that. And we rally. We've done that like 3 days in a row. So it's a strange phenomenon, but also look at the strength in the financial stocks. What's going on with that? I think there's like an undercurrent of, I'm going to post a blog on it tonight. I'm just looking at some stuff, just kind of decoupling from what's going on in Europe. We know it's a mess. We know they got to refinance. Everybody's got that figured out. The ECB is pumping them full of credit. We'll take your crappy bonds. We'll give you a bunch of cash, and kind of like a TARP deal. But it seems like for one reason we're riding through that and now looking at U.S. economic news again. That's what it's feeling like.
Yes.
Totally agree.
And we had some decent news this morning that Jobless came in a touch, a scotch lower than expected. So that helped to, I think, curb some of the downside as well. So we had a little bit of upside coming from that. That was pretty much some of the only really bullish news we saw outside of the old tech realm. Speaking, and so Vol, you said was that, so you had some decent gamma scalps today in the VIX?
Actually, the position we were just looking at buying straight out puts because the Feb and Jan futures were $2 above, I think, cash at some point. I got to pull up the CFE website again. But when we were doing the pit report at 1:30, I mean, where the cash was trading, VIX cash was trading at the time, the at the money call put was like 55 cents. So, if you're getting the compression of the future going down to cash in a couple weeks now, let's see, VIX expiration is the 18th. It's actually a little shorter than normal expiration this time around. So it looks like kind of a compelling trade. So in short, yes, they were getting basically just letting sort of back spread indexes go. And some of the Cheapy premium we've been telling people to look at is kind of working out. So.
Gotta love that Cheapy premium, as you put it.
Right. Well, yeah, especially when you get these gap openings down. Everybody can buy a little stock and then they watch it go up. It's like a video game. So, there's some mild happiness there with some of it.
Gamma scalping, the cure to all ails in the options market.
I know.
Just get long some premium and scalp away. You'll make a fortune.
Yep, and you'll retire young and good looking.
You don't see any infomercials touting that. You see the infomercials, make money in any market condition. You don't see the ones saying, come on in and scalp some gamma and make your fortune.
It does not sound sexy.
No, it doesn't.
There's not a lot of sexiness.
I think the notion of sitting there in series with a vodka tonic at 9 o'clock in the morning because you're hung on a bunch of deltas probably doesn't appeal to a lot of people. That was a very obscure old floor reference for the few of you in Chicago who got that.
Yes, but I do remember that, though.
Yes.
That's not so obscure for me.
That's true. And then, Tim, I know Tusaw isn't here to discuss his metals. So were you watching anything on the commodity front that really caught your eye today, or anyone calling up with some interesting queries regarding good old GLD or SLV or even the big futures?
Not much with metals, as far as phone calls go. Those phone calls were about a week ago, where the metals. Today it was, where's the euro, and what's crude oil doing? So, it seems like people are, I had a couple people saying, okay, I'm going to, place an order to sell the euro, and then they would kind of hesitate. I'd kind of wait there with them and say, really, is this the moment you want to do it? Maybe that was 2 weeks ago that, you should have been selling the euro. So people right now are really, as far as commodities, they look to be, looking at the euro and looking at crude oil.
And yeah, not too much else really lighting up the old tape. The only big news, well, of course, we had some of the strongest news we saw of the day was in the old tech sector. We've seen Apple continuing its relatively meteoric rise of late. And another thing that unfortunately Mr. Tusaw is not here to discuss because he is probably the strongest Apple proponent here on the show. Of course, he has somewhat cooled of late. I'm not sure if he still has too much upside or too much underlying left to go here, but Apple has been on a bit of a tear since mid-December. It's rallied from about the low 380s, hitting today, closed at 418 today, so a strong rally for good old Apple. This tends to follow the old pattern we've seen of them rallying into earnings of late, and then, of course, post-earnings, sometimes selling off a bit as the exuberance catches up to them. Of course, this is also a time of the year when a lot of people are turning their attention to the world of consumer electronics, and all the names that are big players in that space, like Apple, tend to get a lot of attention because, of course, the big CES, the Consumer Electronics Show, kicks off next week, and we saw a lot of interesting players, a lot of interesting developments last year out of that. We saw good old Nvidia take off to the races, up about 50% in the week following CES off some developments there, so that's always a fun one to watch. Of course, Apple kind of not really a presence at CES, so maybe people are thinking they're going to announce something soon to foreshadow anything that comes out of CES. But usually if Apple stays to their schedule they've had over the past couple of years, they're going to announce the new iPad sometime around February or March, and then we'll move in from there with some new products beyond that. So the moral of the story behind this recent rally, aside from the rally into earnings, I don't know. I haven't seen anything that really floats my boat. So, Andrew, you guys out there scooping up some cheap vol on Apple right now ahead of the earnings and ahead of CES?
Yes. Mark was doing the option pit this week. He was basically putting on some butterflies and taking them off for, 60, 70% winner, stuff like that. So just, riding the upside flies. They're generally cheap. They trade cheap in there and picking up whatever rally you can before earnings. So that's been the MO. It seems to be working. It's one way to trade Apple. And the Jan vol is super cheap in there. I mean, it's like 10 volatility point discount to February. So, I mean, if you want to buy calls in Apple, this is the time because they sure are cheap. Or if you fly them off, they just don't cost very much.
Did you say you were selling calls, or you were just selling the upside in the calls?
No.
Oh, so selling flies or selling the upside with the flies?
Just kind of buying the butterflies.
Okay, that's what I thought.
Butterflies because they're so cheap. The Jan volatility.
I was going to say, it doesn't sound like a good time to be selling flies.
No. No, it's the wrong time to sell those. It's the untime.
The unselling time, as it were. So yes, interesting time to scoop up. Usually not big fans here of promoting scooping some vol, scooping some premium going into earnings, but it has worked pretty well in Apple. These are historically relatively low levels. You can scalp out of this. You can do a lot. Like you said, you can fly out of it and do a lot of other things to really take those positions off relatively easily here. So not a bad time if you want to pick up some premium. Certainly not a time to be shorting premium here in Apple going into earnings, and considering these levels are not exactly too rewarding on the premium selling end of the spectrum.
Right. The Jan and just this, I think this Jan is forward of the cycle of the earnings cycle, so it's trading at a pretty big discount. So that doesn't happen. It happens once a quarter basically, where you get like this 3-week window where the spot month is so cheap. Anyway, that's the call here from the option pit desk.
I'm just looking here at the when's expiration this
20th.
This month.
The 20th.
The 20th. So yeah, so these Jan calls are before earnings. You're right. So
yeah.
They're not getting that earnings bump.
Yeah, there's no earnings bump in it. Like the Jan, let's see, the 420 calls are 19 vol. That's pretty cheap. Jan ordinary calls.
There you go.
So there you go. Cheapy flies, everybody. Cheapy upside calls.
That's your cheapy pick from Andrew for the week there.
That's your cheapy pick. The 420, 430, 440 flies, what is that priced out to? It's like $1 and change or something.
Yeah, something
it's
around
not
that level.
Very much to buy that upside.
It's pretty nominal.
Hey, Andrew, if you don't mind, real quick, I take a lot of phone calls from a lot of customers who, they will go to a seminar, they will go to a workshop, they'll do some reading on their own, and they'll be in a butterfly. I mean, it kind of throws them off sometimes. So I know that maybe some of our customers might be listening here, or I wouldn't say throws them off, but it's not one of the easiest sort of positions to understand if you're kind of a novice with trading. So
right.
When you say that 420, 430, 440 spread, butterfly, and you would be buying it real quick, how would you say that to a novice? You want to buy the wings?
Exactly. So when you buy the fly, you always are buying the wings. So you'd be buying the 420s and the 440s.
Right.
You're selling the 430s, and the reason for it is you're trying to depress the cost of your 420 call. So in this case, you're taking a bullish position, so you're setting the fly above where the stock's trading.
Okay.
And the whole idea of this is, since you do have a shorter time frame, 430s, actually it's only $12 away now, but you're kind of targeting that price and by buying the 420, 30, 40 butterfly, you're reducing that cost. Like the 420 call right now is $5.90, right? So by only paying $1 and change for the fly, you're getting a lot of the bang for the buck for just 1/5 the price. Right. So when I try to tell people they're bullish on the stock but they don't want to pay up for the premium, this is an alternative.
Gotcha.
And And also on the downside, same thing. I mean, you could, if some, you set it up on the downside for stock going down below the strike if you have some favorable pricing. So
okay,
it's just a way to reduce the cost of a position for somebody.
Good.
And they still want to be bullish.
Okay. Yeah, you explained that real well. I mean, it's just one of the trades that I very rarely see a customer say, I know exactly what I'm doing. I mean, whether it's the day they put it on or the day of expiration, and they're saying, what do I do with this thing now? So they struggle sometimes with the difficulty of, buying it, selling, what to do with the wings when you're buying it or selling it. So
I think
it was a very good explanation.
Yeah, you target the middle strike. The idea is for reducing cost.
Mm-hmm.
That's number one. So to me, you're always strike centric between where the stock is trading and where you think it's kind of going to go to. So that's where the center of it is. Sure. And what you do is, you can use those your trading software to kind of, if you're just new to it, you just price different flies out and see how they start to look.
Gotcha.
And that should help people. It should help them start to think about it that way.
Right. Yeah.
The extra leg in the fly tends to throw some people off sometimes. Sometimes that's why we actually, when people ask us similar questions like that, sometimes we'll recommend something like maybe an iron butterfly, which it sounds a little more scary to a lot of people, but I think sometimes people can wrap their head around that a little easier because they essentially just have the two spreads as opposed to the fly with the third leg out there. Some people are, for whatever reason, you're right, that tends to throw some people about what to do, particularly on expiration, what they're doing with that third leg, how they can close it out, what they can do with it. And yeah, we've had some similar inquiries, and we often will sometimes say, what about, have you thought about an iron fly? And we'll kind of walk through that a little bit, and they'll say, oh, I can get that with the two separate spreads there, put spread and the call spread. They can kind of wrap their head around that, maybe a little easier, not exactly the same position.
Right.
But
I agree with you, Mark, because I'll tell you a story. A couple of years ago at Know Your Options, we were debating over whether to do a traditional butterfly or an iron butterfly for someone, and what made us decide on the iron butterfly is that we figured, okay, a lot of the clients that we were working with at the time had done iron condors before. It would be much easier to explain an iron butterfly to them than just a traditional butterfly. And that's the exact same thing. It's, even though it's the risk reward's pretty much identical, or it is identical from a synthetic standpoint, that's what we decided upon just because it's easier to understand for a lot of people.
Yeah, right. It is. You get those two spreads and they can wrap their heads around that. And also they know relatively easily how to leg out of that and what to do at expiration if you're moving towards one end of the spread versus the other. They close one out and that sort of thing. For some reason, it's just a little bit more intuitive, and I think so we've kind of stumbled upon the same thing, it sounds like, Mike.
No, that's a good way to do it. When I also think of flies, you want to pay little debits, or obviously the holy grail is taking a credit for a fly. Back in the old OEX days, you could do that all day, but not anymore. But you think little tiny debits for a butterfly, and you think big credits for condors. That might help too. Little dollars here and then big dollars the other way when you're trying to take in a credit for the iron condor. It's all the same synthetically, but that extra quarter or 30 cents for a butterfly actually makes a difference sometimes in some of these markets. So just don't have people bang them out. Try to think about it, but that might help them as well.
Sure.
That's
okay.
Little tips here from Option Pit. We're full of them today.
Yeah, very nice.
And listeners, of course, if you want to learn more about any of those positions, you can by all means search a number of different sites, including the old optionsinsider.com. Just type in iron butterfly or regular butterfly or many others. I'm sure the boys over at OX, you have a decent education set up over there too. They can search for the articles in the Education Center about that. You can always go to the Options Industry Council. They have a lot of good stuff about basic spreads and how to manage, how to manage them, but how they look at expiration. So you can at least get a feel for that. And so there's a lot of different places you can go to learn more about iron flies versus regular flies. I would just probably stay away from the Wikipedias, some of the low-hanging fruits out there, because you never know what you're going to find on those places. And Uncle Mike Tusaw, you joined us a little bit late, but we did just discuss the Apple rally and the Apple upside. And Andrew was asking me earlier before the show if you were still in love with your Apple position, if you have maintained all that upside. So what's the KYO look? I know last time we talked, you were a little less optimistic on Apple. Is that still the case?
Still the case, but thankfully we didn't put our money where our mouth was, and we're still in it. So that's
a case where your indecision actually paid some dividends here.
Well, it did. Well, I mean, yeah, it did, but I mean, that's the beauty of the collar, is that you can afford to be a little bit not quite know what you want to do yet and stay in something, because if you have the risk managed, then, well, you can benefit from it. Whereas if Apple would have taken a turn for the worse, then we would have been protected in a lot of ways to the downside. And, nothing's perfect by any means, but the beauty of the collar is that you can afford to be wrong. And we never claim that we're able to predict the market. We take our shots like anyone else, but where our area of expertise comes in is on risk management, and this is one area with which it really panned out.
I mean, I see you out there with your crystal ball, just picking away out there. So you do some prognostication in your spare time.
Oh, it's not a crystal ball. It's my trading quarter. Heads I'm long, tails I'm short.
And quickly, before we close out the old trading block, just give our listeners an update on the stress ball situations. Everything under wraps there in the KYO satellite office. I know our listeners were concerned.
I had to go down to down to the shop of my building that I'm in here in St. Charles and get this crap scrubbed off my hands. This was the most. Never squeeze a stress ball too hard. It's not. My office is a total mess right now, but it's at least off my hands for right now.
I didn't think today was that stressful of a day. I guess it was a high BBI. I'm sorry, a low BBI in the.
No, I didn't think it was either. But I think I think what it was is just from days past. I just gave it one small little squeeze and. My wife always says, thank God I don't smoke, or because I always have to do something with my hands. So she got me a little stocking stuffer Christmas present with this, and it literally blew up in my face today.
That's a sign, maybe. You need to take it easy there, Uncle Mike, when the stress balls are exploding. All right.
You'd think with everything going up, our positions are doing pretty well. Imagine if they were doing poorly.
Yeah, exactly. If it was a day where you had some rolling to do to the downside, it might have been several stress balls you went through instead.
Ay.
All right, and that is going to do it for the old trading block today. And now we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we dive into the interesting, the odd, indeed, the unusual options activity that is lighting up the old tape today. And it was kind of a quiet day, but there were a few interesting ones. We're going to start things off with good old Barnes & Noble, ticker symbol BKS, and good luck finding that one in some of your quoting software out there, listeners, because we had a devil of a time before the show bringing up this symbol for whatever reason. Some of our software just didn't want to accept it. But it closed today at $11.24, down about $2.31 or about 17% on the day. And the reason for all that downside in Barnes & Noble is that they've had a relatively successful product in the old Nook, but it's also been pretty expensive to produce. And so that hit their earnings, and they posted they forecast a wider than expected loss coming in here to 2012, and that of course just crushed the stock. Not surprisingly though, or perhaps surprisingly, I guess depending on your point of view, there was some mixed activity in BKS today. It wasn't just a flurry of put buying. We actually saw some relatively sizable sellers here opening up the day in January, and the put options. We saw the Jan 7.5, 9s, and 10 puts really bringing in attracting a lot of sellers, and we saw the largest trade, a block of 2,500 of the Jan 10 puts being sold for $1.05. And so that kind of struck our attention as being interesting, given the resoundingly negative sentiment here on Barnes & Noble going forward, and the outlook on the day that people would be coming in. And one of the first trades really lighting up the tape was a size put sale, at least comparable size for BKS. I don't have the daily stats on BKS here to talk about their options volume because, of course, our software didn't accept that ticker symbol, so we're just flying blind, as it were. But we also saw, rolling out to February, we saw a little more mixed activity. We saw a lot of interest in the Feb 8 and 10 puts being gobbled up quite a bit, as well as opening trades in the Feb 10 and 11 calls. So we saw downside buyers, upside buyers as well in Barnes & Noble. So a relatively mixed outlook here for BKS. No real trend to the overall option paper here. But I thought it was an interesting one to bring up for a number of reasons. It kind of fits into the narrative we were discussing earlier about tech and everyone looking at tech in the early part of the year just because of so many developments in that sector, not least of which the old CES show coming up next week, as well as just the interesting development of that Nook Reader. Any of you guys here, have you guys picked up or played with that Nook Reader over at Barnes & Noble?
I have not.
Have not.
It's good. Nope. This is the time when Rob should be here because Rob's the other tech aficionado. I'm sure he's played with it already and probably rooted it at home.
Now, also too, was there a little news that they might spin that out?
Yeah, that's what I was getting to. Yeah,
driving it up a little bit
because it was a decent business for them, and it was a good hardware, but also a very expensive business to run, which is why they're thinking about maybe spinning that off, which is, of course, depending on your point of view, a plus or minus for the rest of the main holding going forward when they're spinning off probably one of the more interesting parts of that business. And the interesting thing about that tablet is that the hardware is actually pretty impressive. But by all accounts, it's supposedly much, and I played around both of them and the Kindle Fire, and it's by most accounts superior in just about every way to the Kindle Fire, except for the fact that Borders just went out of business, and a lot of people are kind of worried that if they pick up this much better piece of hardware, the ecosystem behind it, the Barnes & Noble ecosystem, won't be around much longer to buy books from. So I think a lot of people are just diving into the Amazon ecosystem, even if the hardware is inferior, because they know that at the end of the day, they'll be able to buy books from Amazon a year or two from now, whereas that's an open question with the Barnes & Noble reader. So a lot of flux, a lot of give and take going on here with Barnes & Noble, which I think is an interesting one. Obviously, from an options perspective, a very interesting name. Any calls coming in on BKS today, Tim?
Yeah, actually, as a matter of fact, one of them reminds me of this customer who he funded his account maybe a couple of years ago, and he did nothing but buy calls and puts, and it was a slow death of his account.
I was just going to
but
say,
he was a nice guy.
He whittled it away to
He was
nothing.
consistent. He wasn't calling on obscure stocks either. I mean, he knew what to look at. But again, it was just slow. I mean, he just always bought too much of whatever it was, and then he was gone for about a year, and he came back. And so he refunded his account, and all of a sudden now, he really did some reading, and he's been doing ratio spreads, kind of just took the next step up, other than just buying calls and puts. And this is a position that he had on. He was long some puts from about a week ago. So his trades, they don't last very long anymore. They used to last, you used to buy something and just kind of hold on and hope and pray and everything. But now he really, he kind of knows, what to look at, how long to stay in a trade. And so, yeah, this was a trade that he made some good money on today. And, I was real proud of him.
Always nice to hear when these customers step it up a little bit and they go from just blindly buying lottery tickets to actually bring a little bit of just like I said, just one degree of nuance to that trade, where instead of just buying lottery tickets, he's ratioing it off, and all of a sudden these trades are looking much better, much more profitable, and it sounds like he's doing all right. So that's a good, heartwarming story to hear, Tim.
Yes.
All right.
And we like talking to him, I mean, we'll all help him out and do whatever we have to do for him. But before, when someone just calls you all the time and they're hanging on to these losers, and, it's just like, whoa, it's penny bid by 2 pennies. It's been that way for the last 3 days. It's really not going anywhere.
In that case, you're kind of a psychiatrist and a hand holder as much as you are his
broker.
Oh,
yes.
It's okay. It'll come back.
Like a bartender.
Exactly.
You're kind of like a bartender. Yeah, but even after earnings, there's a pretty solid vol pop in here. So this could be one of the times where the option buyer Andrew turns into the kind of iron condor type seller here in February or something. Because look at this, juice all the way down to February 9. So I don't know.
Feb 9 puts went out 50 at 55.
50 cents.
That's got to be a garbage. Oh no, there's this pretty sizable 50-cent bid there. So
yeah, it was for So there's real juice, and so it'd be interesting how they value the company on a carve out. Can they do it into the Feb cycle? So those are the kind of ways I start looking at it. Is okay, things are happening. What's the time frame? What looks reasonable? Are they pricing that? So that's how I know. That's how I start my trade generation, basically.
Yeah, this is interesting one to parse because, like I said, we don't really know the specifics of how that will shape up and how that will impact BKS going forward if they're spinning off maybe one of the more expensive, but also one of the more interesting divisions of that company.
Yeah, I mean, it might be a net nothing for the company, really, when you think about it. Except you got some weird stub you're won't be able to trade for 3 weeks or something. But it's interesting. After the earnings, a lot of news is out. You're still seeing some pretty high implied volatility. I'm looking at the daily chart, and it's almost through the earnings highs. It is through the earnings highs today.
What's actually interesting about that? If they do spin off that subsidiary of the Nook, that might actually be better in the long run for that subsidiary because then they would probably, perhaps, depending on the deal, be free to turn around and add other formats, perhaps the Kindle format and everything else to their device, and then people would have a reason to buy that device going forward as opposed to just being locked to that Barnes & Noble infrastructure. Granted, that's just pure speculation on my part, but it would be an interesting development. Otherwise, you're left with a technology spin-off that's interesting but very expensive to run and maintain and competing in kind of a difficult marketplace. And you have an old-school brick-and-mortar bookseller, which is not exact. It's like being a buggy whip manufacturer in this day and age, Not exactly a lot of upside to that business. So, yeah, how that will shake out is an interesting question. Maybe those Feb 9s are 50-cent bid for a reason.
Yeah, exactly. January might be better. We only have a few weeks here to go.
There you go. Yeah, Jan
5 volatility.
Jan 10s, you can go for 40 instead and take a little more heat under your collar there. Yep. All right, and with our naked premium sales, no, of course, Andrew likes to
do this at home.
Exactly. Andrew likes to spread everything off, so I won't put that on you that you like to sell naked premium just once in a while.
We like to talk the spread. You
like to do fully clothed premium.
Yeah,
right.
I think it's much better for everybody in the long run.
Next up on the old odd block is one I don't think we've ever actually talked about here before. FOSL, the maker of fancy fine watches. I know Mr. Navabi loves his FOSL watches. And they closed today, or ticker symbol FOSL, now that my quoting system is working again. And they closed at $81.44, up about $3.36 or over 4% on the day today. And this is the name that does about 2,500 contracts a day. They did over 11,000 today, so a strong surge in option volume today for FOSL. And of course, a lot of this came on the heels of a buy rating by some of the analysts out there, with someone put a share price target of $105 on this one. So that, of course, led to some upside activity.
Looks like they wanted to get there today.
Yeah, exactly. There's that buy target. Let's go. 105 in one day. We saw actually a lot of put activity, but a lot of it was in the selling realm, as you might expect, given a buy recommendation on the stock here. We saw about 6,500 of the Jan 75 puts going up today. That was by far the largest trade of the bunch today, and almost over half of the ADV on the day. And on a previous open interest of just over 700 contracts, this is a lot of opening paper. A bunch of these puts, the bulk of them, including a large block of over 3,000, were sold for about $1.45 today. So a lot of people coming in, hitting these bids, just like Andrew, selling naked puts here on good old FOSL. But we total of 7.
I'll tell you, one slip of the tongue, you're in big trouble in this group.
Exactly. We like to make you pay for every misstep. And total of these 7,000 actually of these Jan 75 puts went up today. So this was by far the most active strike of the bunch here in FOSL. Like we said, a bunch of put sellers coming in good old FOSL. Obviously, buying into this belief that FOSL is heading north. I'm not sure why Watchmaker is lighting up the tape today, or why this guy is initiating this buy rating. I guess the same store sales data was pretty strong, and that was enough to trigger this flurry of option paper here. We also saw some call buying up on the Jan 80s, though nowhere near as much as the Jan 75 puts. We saw about 600 of those going up on the day, so maybe some people were legging into a bullish risk reversal. I think the bulk were just hitting puts here on the Jan 75 strike. So Not the most nuanced paper, perhaps, but interesting nonetheless. So a watchmaker is going to close us out here on the old odd block. Any of you guys watch FOSL at all, or active in the watch scene?
I see it a lot, actually.
I'm looking at, really? You see FOSL up on the on the
believe it or not. And it's interesting because the people that tend to trade it don't really seem like the watch type, or even that they know what it is. But I don't know if it's the letters in the ticker or the FOSL. They think because they're old, it's got something to do with old people.
They're
I don't know.
dinosaur bones out there.
I mean, it's interesting. I get a lot of, a good number of calls with FOSL. Steady. I mean, I'm talking, within the last year or so. I don't know.
So you watch it?
Yeah, exactly. Exactly. So, but yeah, I mean, it's interesting because I'm always like, I'm not. Do you know what FOSL is? I mean, so
that's surprising. Is I literally can't remember ever having any inquiries on FOSL or even bringing it up for any of the shows we do. It's one of these ones that we just don't really talk about the watch scene that often here. Maybe because it's been stagnant for the last 400 years or so.
I would think that the group that's playing the FOSL that I speak to actually would be playing like Tiffany's, but again, I don't think they know what FOSL is.
Yeah, all right, so that is gonna.
Somebody knew the stock was going up for sure. That's for. That was a nice sale. They sold the bottom and whoop! Oh, there went the stock. So.
Funny how that works sometimes.
Yeah, sometimes.
All right, and that is going to do it for the old odd block today, and now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. Of course, this is the portion of the show where the boys at OX take the reins. And Tim, you already told us that a lot of people are calling in about the euro today, but you said looks like people also are getting a wee bit more a taste for adventure, a taste for excitement over in the OX side of the fence. A little more perhaps riskier trading going up on the old boards today.
Yeah, I mean, it seems like, the New Year's resolution was, I will not be afraid of risk. Or if risk isn't around, then I play. So, I mean, it's interesting. It's very different from December. I don't know if they feel they're going to miss a rally that's starting right at the beginning of the year, but people aren't really playing any defense. They're playing offense. They're looking for more riskier trades. So, that's kind of what has been going on here. And, like one of the examples again was, Bank of America. People just can't seem to be getting enough of that. I don't know what changed within the last 30 days on that stock, but people just really want it.
Good old Bank of America, huh?
Yeah.
And for the first time, you're not seeing the Widowmaker in the top 10 over at OX. Maybe that's a good sign. I guess depends how you view it, a good or a bad sign, because on the flip side, maybe all those people have blown out and they're living in a homeless shanty or shelter somewhere right now. But on the flip side, maybe people have also wisened up a wee bit and decided not to just hit downside bids all day in Netflix and maybe move on to some other strategies.
Wasn't there a rumor yesterday? I mean, some huge option purchase, like in the $100 calls or something like that, with Yahoo buying them. Did you hear that?
Let me peruse my site for unusual activity.
I thought
while
maybe
you
that's
answer
what.
That.
Yeah, I mean that's kind of why I mentioned that, is because I heard or read some news about some crazy idea about Yahoo purchasing Netflix, and all of a sudden there was a big purchase. Real big option purchase.
And we had a big $1
strikes.
A big 1x2 going up in Yahoo yesterday as a 1x2 call spread, 20,000 by 40,000 times. It was a July 16, 19. That could be that one probably wouldn't be on the talk of picking up Netflix. At least I can't see why people would be buying a ton of upside, even on a ratio, with talk of acquiring Netflix. I think if anything, that would crush the stock. And they also did appoint new CEOs.
I know
that
for
could be part
sure.
of it as well.
I just can't think of the exact option, but I know for sure there was a huge trade in some $100 calls yesterday. I just can't think if they were Jan or Feb or what. But So yeah, that's kind of, I was like surprised, like, man, I really thought we'd get a lot of people jumping into Netflix, but they'd rather go for Bank of America, it seems like.
Just looking here at Netflix while you're talking, see if I can find that yesterday's paper. I don't see it lighting up. Maybe I'll dig a wee bit more. But anything else going on in the land of OX?
In the land of OX, no, not too much.
All right, Tim, thank you for that update. And that is going to do it for the old Xpress Block. And now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our individual horizons for the coming week in the old market. And as we talked about and alluded to at the top of the show, the NASDAQ is up heavy, the techs are rallying hard, and a lot of that is due to the impending arrival of the big Consumer Electronics Show next week. And last year we saw a lot of interesting developments. A lot of stocks took off. A lot of volatility movements across the board in the tech land, including one of our favorites last year was Nvidia, which really, I think, rallied about 50% in the week of CES and the week following, just off some news of their unexpected announcements at the show. So there's always one or two flyers that explode or get crushed out of the show, just like Nvidia last year. So we'll have to watch to see which one that is this year, or which ones fall into that camp. But that'll certainly be moving the needle on a lot of the consumer electronics names. Maybe it's not a bad time if you can find some cheap vol to pick it up. I'm not sure if Apple is a good scoop going into CES. Just because, obviously we talked about it earlier, being a good scoop going into the earnings. You may want to buy it for other reasons, but they don't really play at CES or announce much in the CES time frame, so it may not be a great time to pick them up. Of course, you might have some competitors announcing some interesting stuff that crush the stock and pay off on that vol, so it might be a good time to even pick up some Apple vol. Andrew, I know you're playing a lot in the tech land these days, looking at a lot of tech names. Of course, a lot of them in the video game realm, so not too much in the consumer electronics. But anything catching your eye going into the big show next week that might be, aside from Apple, might be some decent
funny
scoops?
that silly little TiVo thing. Stock traded down to 13, now it's 14.5. So that was a straddly action that worked out okay. So positions partially financed, and we're watching it go. So nothing humongous technology so far for us, obviously. A lot of clients ask about Apple every day. So
Apple is just, you can make a living just consulting on Apple these days. It is the name everyone still wants to talk about.
Well, it's a stock that doesn't go to zero, which is kind of nice. It's still, it doesn't rip like it used to, but it's still put in a 10, 20, 25% return last year or something like that. So that's not bad considering what happened in the market. Overall, it still finds a way to make money somehow.
That's true. So, I also like to talk about my stealth Apple, which is good old Chipotle CMG. I always joke about them as they are my secondary Apple. They don't get all the attention or love that Apple does, but for a long time they were very similar, both in terms of movement, in terms of volatility, and in terms of price level. Apple has since outpaced them a wee bit, but still an interesting one to watch. Not at all tech related, so they won't have any big pop next week, but nonetheless, the burrito market is where the action is.
I agree with you, Mark.
You like CMG as well?
People, if they're not talking Apple, they're talking CMG. It's true.
And that's another one that's been on a tear of late, and so the vol levels there, you can get some interesting scoops. They do have earnings in the Feb cycle. Their earnings are after the close on the 1st, so if you want that earnings bump, I haven't done the analysis of Feb versus Jan. I'd imagine Feb has a wee bit of a premium, given that earnings are in February, but it might be an interesting time to look at scooping up some premium out there as well. Mr. Tusaw, what is, aside from GLD and SLV and the ever-present Apple upside, what else is taking up your collective time over there at KYO?
Well, the thing that I'm curious to see where oil is going to go now that it's above the 100 level. Pulled back a little bit today. We don't have any positions in oil, but I think it's an interesting. Whenever it gets above 100, it always kind of catches my attention to see if it's going to continue or just be another head fake. We still could have a shot at getting $200 oil. Now, granted, I'm not loading up on the $200 calls like some people did last. Are you
last buying that day of rage upside?
Yeah, but you never know. And I remember watching oil go to 147 just what felt like just overnight, and that's something that it just always catches my eye. Once again, we don't have any positions in it, but I'd say that's, besides what you had mentioned, that's the other thing that I'm noticing that I think looks pretty interesting.
Problem with oil for a lot of people, though, is there is no GLD or SLV equivalent that they can really dive into very easily. You know, they have to do the big futures and the futures options to really get that pure oil play still, and that makes it hard for a lot of people to really dive in, unless they want to do some of these crazy other ETFs.
I gotta disagree with you. I mean, USO really is a...
Are you a USO proponent? We've talked it down so many times on the show.
I'm a big fan of the USO.
Really?
I mean, yeah.
Oh, you and Tucson might have to have some fighting words then.
I mean, you can call, Vinny on the floor of the Mercantile Exchange in New York and try to trade, options at crude oil. Good luck to you. I mean,
way to disparage all of our floor friends.
Just kind of taking it away. Now, it's not pretty because, I can't price it per barrel, but I mean, it just, I get a lot of phone calls of individuals. I've never traded futures. I'm ready to buy a crude oil contract. and those don't end well. But, if I can talk to someone about the USO, and it takes about a half hour to actually go through it with them, they'll stick around a lot longer. But it's just because it's not priced in the per barrel, people are like, oh, I don't want anything to do with that. I mean, I need to see it at 100. What's this 30? But
I don't know. I think you're kind of choosing the lesser of two evils there. I'm not a huge fan of really either option because, the big futures contract and the futures options are usually way more than most people want to chew. And then the USO, that you said, is not exactly barrel to barrel either. So you kind of caught between two less than ideal options at that point, I think.
I have a great solution. Trade a spread on crude oil.
I suppose that could work as well. Reduce some of your outlay
if you
there.
want to get like the same delta weighting, you can trade but I'm sure Options Express would accept a butterfly order on crude oil, like what we were talking about earlier. You could do the same thing on crude oil.
Yeah.
That's probably I to say that I'm not I like the concept of USO. It's the fact just there's too much differential in it. And yeah, I agree with you, Tim. It's not perfect. And if I was just a beginning trader, for sure, I'd much rather have I think it's much better for a beginning trader to do a 10 lot on USO as opposed to a 1 lot on the big crude contract if you're just buying and selling calls and puts. But as you get more advanced, there are ways to delta weight the big contract to where it can work for you. Beginner, absolutely. I mean, it just from the pure size issue alone, when people see it's like the great tempter, you see the low requirement for the big crude contract. Oh, well, heck, all I need is, because what's the margin requirement right now just to go long the future for the big contract?
It's about 8,500.
So for that, wow, that's like over 10-to-1 margin. Well, how can I lose?
No kidding. I know.
And so with that, if that's what you're thinking, you need to you're better off trading bubblegum cards, quite frankly. But, from the actual, what we need like a micro oil contract and options on a micro oil contract. That's what I'd like to see.
Yeah, a nice 1-to-1 mini size contract would be perfect.
Yeah, because right now the mini oil, it's half the size of the big contract, but they still don't have options on it yet, do they?
Nope. No.
So I don't know. It's one where the Merc and the stock world kind of need to learn from each other. That the stock world needs to see what the Merc's doing on the weeklies, and the Merc needs to get some more mini contracts to get the futures options going on it. So we need someone to bring the two of them together and give each other ideas.
Well, we try to do that every now and then with the CME. We do some shows with them, and they're always complaining about their lack of penetration with the retail. So we're always trying to come up with new ideas for them to help attract more retail customers into the old futures options as opposed to the ETFs and ETF options. And so that would definitely be one thing we've been advising them on for a long time about that, and whether that happens anytime soon. Not exactly sure on that one. Andrew, I take it you're not a fan of USO either.
Position where we faded a little bit, to be honest. It's okay, but it doesn't totally track up, it doesn't totally track down. So it's a little squishy, but if the options are priced okay, then it's worth trading.
You know what it is? It's like the BCS in college football. Until college football has a playoff system, it's not going to be right. It might as well be exhibition football anyway. But the BCS is better than what it was before. So I think USO is kind of like the BCS.
I like that.
A fine analogy to close out the show on there, sir. I like it.
You went for it.
I like it. All right, and that is going to do it for this episode of the Option Block. I want to thank my cohorts, my partners in crime, for joining me on the show today, and starting off with you, Andrew, of Slinky fame. What is going on in the land of Option Pit, sir?
On the 18th of January, Mark and I will be doing using the VIX for some understanding the VIX for a directional tool like the myths, debunking the myths and some of the things that it does well and some of the things that does not do well on the 18th of January, kind of riding the heels of what he did with the CBOE last month in December. It was really popular. It was, pretty much sold out. So we figured we'd give it another shot with a definitely a different bet on getting into the contract a little more. So that is the 18th of January as Option Pit continues to roll forward.
And they find that at Option Pit/events. Is that what they sign up for?
Yes. Yep. Exactly. It should be Option Pit in the events area in Option Pit. So we just posted that today.
All right. And Mr. Tusaw, what is coming up in the land of KYO? I know you guys have retooled all of your seminars and webinars and have a new push going on in the new year. So what is going on over at KYO?
Well, a couple things. First off, yes, go to our website at knowyouroptionsinc.com and sign up for our newsletter, and we'll definitely get you on the webinar list. I will be guest speaking on Monday night, January 9th, on strike price selection on Options Express webinar. Now, January 9th is a very special night. It is my daughter's birthday, my mother's birthday, my cousin's wife's birthday, my uncle's birthday, as well as Joe Cusick's wife's birthday. So January 9th is a
day
special
in the
day
Tusaw
in our
household. And, of course, the Cusick household.
And the Cusick household. So not many people know. It always freaked Joe out every year whenever I'd say, hey, tell your wife happy birthday today.
He thought you were stalking him or something.
Yeah, it was just a weird thing that everyone in my family is born on January 9th, it seems.
All right, and Mr. Tinov, what is coming up? Speaking of Joe Cusick, what is coming up in the land of OX that will interest and or intrigue our listeners?
When I was walking over with the computer, I just couldn't print out an email that we had gotten earlier about some live events. So it's my fault. I'm surprised I don't get phone calls from our education department saying, you didn't mention that. So, I know we got a bunch here, some live events. So, you can always call our trading desk and find out where they are. In the meantime, I know we have some webinars, and, those webinars that are coming up that I think, could be interesting. We have, the covered call on the 19th. We've got intro to options, the long put on the 24th. Just head to our site, call our trading desk, and we'll give you some information on those.
If you do want to learn more about those, you can surf on over to optionsexpress.com. You don't have to log in. Even if you're not a customer, you can do this.
Right.
And then you can click on the free education tab there at the top of the page, and then right there in the bottom, you'll see the live events tab, and that should tell you more about what is going on at OX in the live end of the spectrum. All right, that is going to do it for this show. Of course, if you want to learn more about any of the topics we discussed on this program, like iron butterflies or any of the other fun stuff we discussed, the unusual activity, maybe the breaking news from the options market, whatever floats your boat, then surf on over to theoptionsinsider.com and check it out there. You can also search for Options Insider Radio and iTunes and find more of our exciting programs on the old network, including our newest addition to the network, our Advisors Options program that we do with the OIC, aimed at the financial advisor and asset manager audience. And I want to thank, of course, all of you out there in our audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.